Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right then, for the next few minutes we're going to be looking at the NDX and doing an update to our counts because the video I put out earlier in the week has been invalidated. I did put the invalidation point in that video, suggesting that we should look at it in case we don't get the result we expected. We didn't get the result we expected, and therefore we've had to come back and reconsider what's going on. So I felt it important to get this update out to you guys rather than making you wait another week or so, because this weekend I will be reviewing the SPY rather than the Nasdaq, as I did it early this week. Or last weekend, I should say, rather. So we're going to get this update out now. We're going to try and make sense of what we've seen, and we're going to draw some conclusions, put some levels in place to give us some certainty and some clarity, hopefully. So, first of all, an update of the old count and what's gone wrong and why it's no longer applicable. So, I was saying after we completed intermediate wave 3, for some reason, intermediate wave 1 has been moved. I've been having problems with my charts lately. I'm not quite sure why, but TradingView keeps moving my Elliott wave count around. So could be something wrong with the file or something, or I've had the chart so long that it's not saving properly. I don't know what it is. Either way, so 1, 2, 3 to here, 4 to here, and we're looking for a 5th intermediate wave, up into a 5th primary wave, up into a 5th cycle wave, 5th minor wave below all of them, to the top of the market, out into the summer, I was saying. Well, in order to do that, we were going to have our 5 minor waves, right? Like this. And we drew a white line in the sand in the previous videos we have done for the last couple of weeks, saying that this level here, 13.296.67, this was our wave 4 invalidation point, and our wave 4 invalidated it. So this count is wrong. So we're going to have to make the assumption now that the market is topped. Now, it's going to be really easy to find out if it hasn't, because the market will make a new high and it will prove me wrong. I'm not saying for certain it has. I'm saying given the invalidation of this bullish count, we should start interpreting things bearishly and make the assumption, for the meantime at least, that the market is topped. But don't get your knickers wet yet, because we're not going to. If you're desperate to short, we're not going to fall 50% in an hour or in a day. First of all, we physically can't because we have circuit breakers in the way. So we have to be prepared to be patient now, start counting things up in a bearish style, and assume that whatever initial move down we get on whatever scale, 4%, 5%, 10% correction, we have to assume that is our wave 1 on the smaller time frame, and that we're waiting for a retracement into a wave 2. Now, in my opinion, any dip on that magnitude is going to get bought up. The human robots, and I don't mean as in algorithms, I mean the human robots that have been programmed to buy the dip for the last 12 years, I reckon will continue doing so. So any significant move down from here will be met by significant buying, I think, and then that will be the opportunity to confirm a wave 1 down and a wave 2 back to trade what will be a glorious wave 3 collapse for those who want to short it and want to get in. So let's move over to the new count, which interprets the top as being in, and we're going to talk you through how this counts. So wave 1, wave 2 on the minor time frame in the same place, but then this happens instead. We get a wave 1, we get a wave 2, we get a wave 3, wave 4, no overlap. Wave 3 is not the shortest. We get a little short wave 5, which just clears the wave 3, making this a perfectly legal, although not perfectly symmetrical or balanced, but a perfectly legal impulse wave to a high. And that's how we're going to have to count it for the meantime, having had our bearish count, our bullish count invalidated. So from the high, and this is very rough, guys, we've come down in what I think is an impulse wave, believe it or not. There is no overlap of the wave 4 and the wave 1. And the wave 3 is not the shortest, so it is a legal impulse wave. However, it looks like a diagonal, to be honest. It looks like an expanding diagonal, and it can be an expanding diagonal, an expanding leading diagonal. It doesn't have to overlap with a diagonal, it just has to look like one. And I think this probably does. Now, this is a bit of a base and very simplistic assumption, because any move, if we are bearish, and we're saying the market has topped, any move off of the high, the idea that after 12 years of going up, you're going to get a beautiful, crisp, clean and perfect impulse wave to start things off is a little optimistic. So it's a bit of a mess, but it's there. Okay, so really simply, now, if we've had a 5-wave move down, we may have to come lower to complete 5 waves down on what I'm saying is the minor time frame. This is minute 1, 2, 3, 4, 5 into a minor 1. Then we will be waiting for a 3-wave move retracement back up towards the highs. Okay, and then we're going to start moving down properly, which would still take us out into June, into summer. So although the market didn't peak, if we're assuming we've topped, didn't peak out in the summer like I expected, it will still be topping. It will be in a topping process throughout the summer. So, and this is still making a lot of assumptions, guys. The first area of support the bulls were interested in fighting for after the invalidation of the wave one was the edge of this trend channel, and that's exactly where we stopped. We opened yesterday on it, and we immediately ran up to close the gap. We've closed that gap that we opened yesterday, so now all bets are off. We could continue lower and continue to push this impulse wave down, and this count could be just an extension of a 1, 2, 1, 2, 3, 4, 5 down into a 1, or we could have bottomed and we're coming up into a wave 2. So keeping things super simple, any move above the previous all-time high at 14.072.27 invalidates this bearish count, and this is all wrong. And I've got to go back to the drawing board big time styly and figure out what is going on. And that will be that. And however long that takes, I will go off and work on the chart, and I will come back with an alternative. You can trust me to do that. But that's the level. Bearish invalidation at 14.072.27. If we make a new all-time high, this is wrong. Confidence below 13.011. Why? Because in case this impulse wave is counted incorrectly and we've got some kind of extremely weird diagonal going on, let me show you what I mean. Something like, God, how would it would have to look. Can't come back below that wave 2, so I don't know, something like this, like a 1, 2 here, and then we go 1, 2, 3, 4, stopping before the minute 1. In other words, we're saying that this is not a minor wave 4, this is somehow a minute 4, incredibly deep, not invalidating this level. I mean, I think that's complete nonsense, to be honest with you. It just doesn't, it looks ridiculous. So I'm going to say that confidence below this level at 13.011, then we've invalidated both the minor 1 and the minute 1, and that's it. You know, I say we can pick up confidence once we're out of the channel and below this level. Once we break the low here at the bottom of the channel, this is our 3, 4 into our 5. If we break the low here at the wave 4, then we can have a lot of confidence that we're going considerably lower. In fact, we could have confidence that the bear market's already well underway. So it's a case of whatever this is, if this is a 5-wave move down in some kind of leading diagonal, a 3-wave move back towards the highs is the shorting opportunity to get in for. This could be going a lot deeper, and then work its way back up in 3 waves towards the highs, and then that's the shorting opportunity. But we've got to be patient, because if this is the completion of a 12-year bull market, it's going to take a while to top out, is my opinion. I think whatever kind of move you get off the highs, you could be looking at a 5%, 10%, 15% correction. Who knows? We just don't know. In this initial wave 1, this could be a wave 1, right? So minute wave 1, minute wave 2, minute minor wave 3, minor wave 4, minor wave 5, 1. A, B, C back towards the top, 2, and then down into a 3. I would expect to see something like that. For the completion of such a long and overdrawn bull market that's so old now, I don't think it's going to die easy. I think it's probably going to die hard, and I think people are probably programmed to buy the dip no matter what, no matter how bad things might look in the market. Their optimism about the booming economy, blah blah blah, and all that nonsense will probably drive them to buy the dip. You know, could be completely wrong and the thing could melt down, but it's just my hunch. So, okay, that's it, guys. I am absolutely waffling like a crazy person now. I know I am. Sorry about that. So, let's just sum up. Super simple. We are now interpreting all price action until proven otherwise as bearish. So, until we go above 14.072 spot 27, we are bearish. We are assuming the market is topped. We are looking for some kind of tradable retracement of significant pullback. Anything which brings us back in a significant move towards the highs, which has a free wave ABC structure, either a zigzag or a flat pattern. We're looking for some kind of free wave move back to short this thing. And that's it. And then we want a reaction. We all know how we define a reaction. We define a reaction as a 5 wave and 3 wave move on a much smaller time frame. So 5 waves down, 3 waves back, reaction, then short. That's what we're looking for. Okay, guys, that's it. I'm going to leave it there, otherwise I'm going to waffle too much. So before we go, I'm just going to hide the Elliott wave count, and we're going to look at the basic technical analysis to wrap up the video. So let's just get our chart set up. So first things first, we have a 10 exponential moving average in yellow, a 20 in blue, a 60 in orange, and a 250 in green. And we have an RSI set to a 10 close with a red 70 level representing overbought and a green 30 level representing oversold. We have a MACD with a 10 for the short term moving average in blue and a 20 for the long term moving average in orange. Right then, what can we see here on the... Let's go out to the weekly, shall we first? Should always start at the weekly. So, what can we see? At the moment, the candle is not as bearish as it could be. We've had a bounce, we've got a wick to the downside. Like I said, we could be in some kind of free wave retracement. Well, we know what we have to look for, and that's simply a new high. If we don't get a new high, we're looking for 3 waves back towards the high to short. Because we're in bearish mode, remember? So, but still above the 20, below the 10 exponential moving average for the moment, well above the 60, well above the 250. Now, the thing that gets interesting here is the double top we formed. So, 3, 4, 1, 2, 3, 4, 5 into a double top, a little higher. So the 5 just eking out beyond the 3 on this time frame, and the 5 just eking out beyond the 3 on the smaller time frame, basically mirroring the larger and the broader top. We see bearish divergence all the way from, well, we can't, let's ignore January because that has been cancelled out by that low, but all the way from the 24th of August, we see a high, a lower high, lower high, and lower high in the RSI, while we see a high, higher high, and higher high in price, a bearish divergence that's been playing out since August last year. High, lower high, lower high in the MACD, high, higher high, higher high in price. All of this is, it's not a massive divergence, no, but we are looking at the weekly time frame and a batshit crazy market that has run up insane amounts since since February 2020. So the fact that there's any bearish divergence is impressive in itself, in my opinion. So we do have bearish divergence. It is calling for a breakdown. We've got another recent divergence between these two highs and these two highs. Everything's in place for this market to break down. So a small retracement, a confirmation of a lower high, 3 wave move back into a lower high, that's a shorting opportunity in my opinion. So still fundamentally bullish in terms of price support and major levels, but looking internally bearish, ready to give up, ready to break down. So let's look at the daily time frame. Now, daily time frame, below the 10, below the 20, below the 60 exponential moving averages. 10 has crossed over 20 with the price below it, which forced this bearish candle down to this low, but we've since bounced pretty strongly. Like I said, this could be 1, 2, 3, 4, 5, 1, 2, 3 back up. We have had a bounce, but we're still currently below the 60, below the 10, below the 20. Sustaining price below the 60, with the 10 and the 20 crossing over the 60 with the price below it. If and when that happens, that would be a death cross on the shorter time frame, not the 250, but on the 60 time frame on the daily, which would be bearish. We'd want to see that same thing happen on the long term on the weekly time frame, which is a long way from happening yet. The 60 is all the way down around 11,200 at the moment, so that's a long way off. So sorry, that was the wrong chart. So that is still a long way off. So what else can we see on the daily time frame? A push up into overbought conditions. Now, this is interesting because the bearish divergence we witnessed on the weekly time frame is barely present on the daily time frame, but it is there. It is there. It's not here between the two recent highs, though. That's just a genuinely bullish move to a new high. Go back further, and we can see that higher high, high, and lower high, but we have to ignore this intermediate high here. So the top of the wave 3, the top of the wave 5, we can see between the top of the wave 3 and the top of the wave 5, we peak in the momentum in the wave 3. That's what we'd expect to see, the peak of the momentum in the RSI, and the 5 coming in below it. So on the longer time frame, 3 and 5, it is bearish. It is a bearish divergence. But in terms of the intermediate wave in between, there wasn't really any sign of the bearish divergence before this wave 4 breakdown, which was signified here. So you have a high, lower high, lower high, lower high, breakdown. Meanwhile, high, higher high, higher high, higher high, breakdown. So what we saw play out, divergence on the daily time frame between these lower highs in the RSI and these higher highs, that was completed at intermediate time frame. And what we're seeing here between the primary 3 and the primary 5 divergence on the weekly time frame should start playing out on the weekly time frame. That would be my assumption. So MACD, bearish for the moment, short-term moving average cross over the long-term moving average, darker red bars and the histogram building momentum to the downside. Even with the green candle yesterday, we have not been able to pull back the bar on the histogram for the week. So how the week closes is going to be very interesting. I think early days yet, but we are interpreting it as bearish. And that is where I'm going to leave it, guys. If you're new to the channel and you've liked what you've seen, please subscribe, smash the like. Leave us a comment in the comment section below if you want to. Hit the little bell notification icon to remain informed of future video releases. And thank you to my patrons. As always, your support is greatly appreciated. If you're interested in becoming a patron and benefiting from all the wonderful options and what should I was about to say benefits. Benefit from the benefits, Tom. That's not very good English, is it? Enjoy the benefits that are available. How's that then? You can go and have a look at the link in the description box below to my Patreon. Have a read for yourself. If you want to become a member, feel free. I would advise to always do it near the start of a month rather than the end of the month, because that way you avoid getting charged twice in succession. Okay, I also have a link to my Twitter feed in the description box below. If you're not following me yet, please do. And that's it, guys. Take care, and I'll be back with you shortly. All the best. Bye bye.